Good morning. I'm Kathy Boffman-McLeod, the director of the Adrienne Arsht Rockefeller Foundation Resilience Center, and you have found us for the perfect storm: global pandemic, recession, and hurricanes. As these crises pile up, how do we build a resilient recovery? I'm very pleased to be here today with our guests, and we're going to get to know them shortly. But I wanted to start by saying that when we set the title of the session and referenced crises piling up, we could not have envisioned the events in Minneapolis after the murder of George Floyd and the reactions across the US and beyond. And I would be remiss if I didn't mention the pain it brings, along with a laser sharp focus on inequality. And resilience is nothing if not addressing inequalities that are driving so much of the vulnerability that we all face around these many crises. And though today's session was not focused on that specific topic, we will be touching on it and weaving it through our conversation, as it is historic and essential for us to move ahead, not only as a resilience center, but as a society. When we think about those resilient communities that we're looking for, and we think about just two of the many crises, climate-fueled hurricanes on today, the first day of the Atlantic hurricane season, and pandemic, and not just pandemic as a health crisis, but pandemic as an economic crisis, we have to look at the way inequity, bias, and injustice play a role in those crises alone. And so let's get into the conversation. Thank you for joining us today. I'm so pleased to introduce our center's founder and the executive vice chair of the Atlantic Council, a businesswoman, an impact philanthropist, and inspiration, Adrienne Arsht. Resilience inspires Adrienne every day. Over to you, Adrienne. Thank you.
Thank you. Well, I lived in Miami for quite a number of years, and I have a home there, and one of the largest buildings, the Performing Arts Center, is there. So Miami is the center of my thoughts for a long time, but especially on June 1 and the beginning of hurricane season, though named storms are happening sooner now than June 1. Behind me is a map, and as you can see, the Caribbean is very much a part of our hemisphere, and I think that it's important that we all recognize that the Caribbean needs to be more important in our thoughts, in our planning, and our knowledge. Wanted to thank everyone for their participation and the partnership that we have, that we're developing with some of you, and long-term other partnerships. And Samini, your work has meant so much, not just about olive oil, which matters so much to all of us as we're all cooking at home. And I'm going to end now and turn it back to Kathy and let her proceed.
Thank you very much, Adrienne. Thank you. So we have with us today, and actually, I'll turn it over to Samini Sengupta. We'll get into the introductions, and I see Ambassador Chastanet has joined us, which is great. Samini Sengupta, I feel like if you are following climate change, you likely don't need an introduction, Samini, but an award-winning New York Times writer, a published author. Yep. I don't know if you've read The End of Karma, but it is a spectacular journey, her journey, but also a journey through India that helped me really understand, as someone working in India, new to it, how to interpret some of the things that you experienced there. It's fantastic. So an author, a George Polk award-winning foreign correspondent. She's reported from the Congo, from Baghdad, from the glaciers of the Himalayas, and from Mumbai. and now the global climate change reporter at the New York Times. Thank you so much for joining us today and for facilitating this important conversation. Over to you.
Thank you so much. Thanks for having me and for that wonderful introduction. Welcome to all of you in what is just an extraordinary time that is a little hard for, the head and heart to even hold together. And it's a time that, Kathy, as you said, really blows the lid on so many underlying inequities in our societies. And forces us to think about how we're going to live differently, and forces us to think about how to handle risk. And so to answer that question, to help us think more deeply about that question, are two very, very two people who have thought about this very deeply, who have lived through these risks. The Prime Minister of St. Lucia, Prime Minister Chastanet, a big welcome to you, and Isaac Anthony, the head of CRIF, the resilience facility, the insurance facility, which we will hear about later in the conversation. And a big welcome to all of you who have joined. Please do think about what you would like to learn from this session, and please send us your questions. And we will have a chance to really ask our speakers, ask our experts about that. So the question of risk is obviously really, really important, extremely urgent question for the people of the Caribbean. Extreme weather events already presents a huge threat every year for the people of the Caribbean, and it's an even bigger threat today when we are living in the shadow of this pandemic, when economies are crashing and ordinary people are stretched to the limits. And as you know, beyond the Caribbean, we've witnessed some of these hits already. A cyclone slammed into Kolkata in India, which is the city of my birth. Here in the United States, pounding rains breached dams in the Midwest. And today, as Kathy just pointed out, is the beginning of hurricane season. It starts today, and meteorologists say that we can expect a particularly severe hurricane season. So I want to start with you, Prime Minister. If you could please paint a picture of what you are preparing for this year. Give us a picture of, what a severe hurricane season might look like for you in your region, in your country, but also your region as a whole. And I might just remind our audience that the last, major hurricane season in 2017 displaced something like 3 million people. That's just an extraordinary number. Prime Minister.
Thank you very, very much. And I think before I answer your question directly, I think what it's important to do is to put this thing in context, because without understanding the context, then you would never really appreciate what we're actually facing and how the resources that we have to battle climate change. So after World War II, when institutions of the World Bank, the IMF, and the UN came into existence, many of the SID countries as we know them today didn't exist. In fact, many of those
island
developing states.
Yeah.
So, which there are 47 of them. 43 of them are actually Commonwealth countries. And so, in essence, many of the SIDs got their independence when the UK decided to decolonize its empire. So I say this to say to you that the World Bank, the IMF, and the UN were not really designed to deal with microstates. And we've seen the result of that. So we had 9/11, in which the economies of our region were marginalized. We then had the economic recession, in which we went from the G7 to the G20, and none of the resources that were being made available to developed countries were being made available to SIDS. We were just relegated to survive ourselves. And as a result of the economic crisis, that is when there was a huge downturn in the economies of our region, particularly driven by heavy load of debt. We then had now the climate change in 2017, 2018, and 2019, where we've now seen that these natural disasters have taken on an enormity that we couldn't have described. Normally,
Can you
we would have
describe that, Prime Minister? What did that look like in your home country?
Yeah. So basically, we measure the impact of a hurricane by its occurrence. So when you hear a person say that there's going to be a one in 100 year occurrence, it tells you it's pretty severe. So most of the buildings that we have are built for a 1 in 20 year occurrence. So we had Hurricane Tomas in 2010. And when we had that, it was just a Category 1 hurricane, but we had the equivalent of 3 years of rain in 48 hours. And being a volcanic island, it created a tremendous amount of landslides around the island. In fact, completely cut the island off. And we almost came to the point of literally having to say officially the country was closed. But
right.
the amount
So
of
just to understand that, in 48 hours, you got a cloudburst bringing 3 years worth of rain.
Correct. 36 inches of rain.
36 inches
And
of
it was
rain.
just, and it started off as a thunderstorm and developed into a Category 1 hurricane while it was over the island. So very similar to what you saw happen in Bahamas last year, where the hurricane literally came to a grinding halt and stayed over one area for literally 48 hours. And in their case, they had to suffer Category 5 winds, and more importantly, as a low-lying island, massive swells of 17 to 18 feet. And so obviously it was just devastating. On the island of Dominica, you had 2 major catastrophic hurricanes in 2 years. So as they were just recovering from one, they got a hurricane, and I was there a week after the hurricane. So Dominica is known as the nature island. It's a beautiful rainforest. And it looked like somebody had taken sandpaper and sandpapered all of the trees. And that's exactly what happened. The winds had carried the sand, and the sand particles, now in a tornado fashion, just literally devastated the rainforest. Now, the rainforest is not something that you can go back and build overnight. This is something that's going to require a tremendous amount of time. And so back to now what our situation is, how does a country that is confined to economic rules that don't apply to it? So the number one thing that we said was, for instance, the OECD. The OECD classifies countries' wealth by per capita GDP. So many of these small islands may have a higher than normal per capita GDP, but in absolute terms, when you multiply it by the population, it's a small amount of money.
Prime Minister, that's really interesting context. Can I bring you to this moment in time, which is extraordinary? What does the pandemic do to your thinking about preparing for this hurricane season in your country, and what are you hearing from your fellow leaders across the Caribbean?
So we're actually in a very difficult situation. We have had to go out and borrow $900 million, which is 22% of our GDP, simply to fund our budget. And that was necessary because with the borders being closed and the loss of revenue, that our revenue has dropped by 50%. We also have bonds and treasury bills, which are not being turned over 100%, and partial of it is being redeemed, so there's a cash requirement for the state. So imagine, if you will, that we have borrowed that kind of money, and it does not include preparing for the hurricane season. And as you were saying, this hurricane season is expected to be a very active one. But more importantly, because of COVID, we now have to go in and examine all of our shelters to make them social distancing ready, which requires even a greater amount of money. So what we've been attempting to do is to work with the World Bank and our Caribbean Development Bank to repurpose some of our loans to allow us to use those monies to now do the desilting that's necessary, fix up some of the shelters as much as possible. And it also certainly helps in trying to revitalize our economies. But not many countries are in the position of St. Lucia that were able to go out and borrow that kind of money. St. Lucia's debt to GDP was only 59%. The majority of SIDS have debt to GDP ratios in excess of 80% and have been running deficit governments for a significant amount of time. And
That's
sadly,
right. Yeah.
and you see, and this is where the context of what I was trying to say, sadly, despite all the evidence, the economic architecture the global economic architecture has never been changed to facilitate these countries. So for instance, we had been arguing prior to COVID that the amount of money that's going to be required for us to build the infrastructure for resilience, building a bridge higher doesn't carry any more cars. Putting utility wires underground doesn't improve the efficiency of the utility system. So these are sunk costs, which we were having to borrow monies at commercial rates because of the classification on a per capita GDP. The Commonwealth Secretariat in 1989 created what was called a vulnerability index, which is a much broader index, particularly for small island developing states.
Right. I want to come to Isaac Anthony now, because you think about risk all the time. And I want to ask you, how are you thinking about the compound risks that are facing the entire region? Storms, the extreme rainfall that the Prime Minister just described, the severe hurricanes are one of the risks. What are the basket of risks that are facing your region that keep you up at night? Mr. Anthony? Have we lost you? No, there you are. Thanks.
There you go.
Yeah. Risk is something that pervades the entire region, and obviously something that we clearly need to think about. You know, like most regions in the world, the Caribbean has to deal with natural hazard risk, political risk, financial risk, economic risk, technological risk. And guess what? We're also facing this global pandemic. One of the things that we also have to recognize is that the small island developing countries are particularly vulnerable to external shocks, as we are seeing in the case of the pandemic. And if I take you back to 9/11, in terms of how it impacted our tourism sector and in fact the wider economy, we also had to deal with the global financial crisis, which had similar macroeconomic impacts, resulting in significant economic contraction and unemployment. And as we have already established, the Caribbean is one of the most disaster-prone regions in the world. I mean, hurricane losses, damage and losses are quite staggering. In fact, generally, they're well over 200% of GDP. In fact, it might surprise you to know that with Tropical Cyclone Maria in the year 2017, that single event on that island accounted for almost 800% of gross domestic product. I mean, could you actually imagine this?
So 8 years of its GDP were wiped out.
Wiped out by one single
storm.
event. And that has been the story, I think, for a lot of countries. And so what we have, and in fact, it is this kind of impact that led, I think, to the establishment of the CRIF. In fact, in the year 2004, we had Hurricane Ivan, which actually, because of the extent of the loss, in fact, that single hurricane accounted for something like $800 billion of losses throughout the Caribbean, impacting particularly Grenada, the Cayman Islands, and several other countries. So that was really like a wake-up call for a number of governments who decided to come together to establish a facility.
So this is a risk pool. Tell me what it can do and what it can't do.
Right. So basically, what the CRIF does is that it provides an opportunity for the countries to benefit from quick liquidity. So essentially, it's an insurance product based on parametric insurance. And the reason why it's parametric insurance is because the whole idea is to be able to pay quickly. as you know, typically with insurance, you have
And
to
by
do,
parametric, you mean when the wind speed reaches a particular threshold,
correct.
or some other metric that tells you a natural disaster has just come.
Correct. So it's basically predefined. It's based on a model. It's not based on an assessment of losses after the disaster, because trying to do that kind of assessment immediately
Takes a long
after
time.
disaster can
Yeah.
take a very long time. So the whole idea is to be able to make that cash available to countries very quickly. And certainly in St. Lucia, and Prime Minister Chasney made reference to Thomas. Under Thomas, St. Lucia benefited from about $3 million in payouts. And there have been other payouts to a number of countries. I mean, some of the more well-known ones, for example, would have been in 2017, when the countries all impacted benefited from $55 million in just a matter of 14 days. So the whole idea is to be able to make that quick payout to the countries. And let me just make it clear that CRIF was not really set up to cover the overwhelming cost of rebuilding, because CRIF would not be able to do this. At the end of the day, we provide one key value proposition, is that making cash available to the countries so that they can start the recovery process as quickly as possible. But there are other tools, other instruments that the countries are now looking to develop in collaboration, of course, with the World Bank, in collaboration with CRIF.
So it can deliver small amounts of money, relatively small amounts of money, really quickly, if those thresholds are hit. If the wind speed doesn't reach that particular threshold, but still a storm causes a great deal of damage, the insurance doesn't kick in.
Correct.
Right?
So that is correct. Once it is the event is below a particular threshold, which is in our case is what called model losses. It's like any other insurance product. You must be able to reach the deductible to be able to reach the payout. But having said that, the CRIF, just to one point I want to clarify, we did create some years ago a product that sits below the deductible. It's called an aggregate deductible cover, which actually still allow the countries to be able to benefit from some level of payout, to be able to cover some of those losses.
What lessons have you learned in this time that you've been doing this, that CRIF has been in existence, in terms of how countries can reduce their risk? And do you think that there may be a time when the risks are just so high that the market won't be able to bear it? And what needs to be done to reduce the risk so that these countries don't reach that threshold?
That's a good question. I mean, and that is a challenge that the countries are continually, dealing with. The reality is that risks will never go away, but you can actually take action to be able to minimize those risks. So, for example, in the case of natural hazards, for example, we already know that, and certainly the climate science is clearly pointing to increasing severity and impact and frequency of those events. The question is there something that we can do? Now, CRIF does provide part of the solution, which is the financial resilience part, in terms of helping the countries to pre-finance, the losses associated with those disasters. So that in the event that the country is affected, they do have cash to be able to deal with this. But there's a lot of work that countries can also do on the mitigation side. And in fact, they've been making significant investments. In fact, again, St. Lucia, as with other countries, have invested very heavily through loans from the World Bank, the Caribbean Development Bank. But it's a massive investment. And the truth about it is one of the reasons why a lot of countries in the Caribbean are so highly indebted. It's partly because of the significant losses associated with these disasters.
With these
disasters,
disasters,
have to recover through loans.
Right. Kathy, can I turn to you now? You run the Resilience Center. Can you first help us think about what you mean by resilient? And tell us what the Resilience Center is seeking to do to help countries reduce these risks?
Absolutely. So to start, the Resilience Center, Adrienne Arsht Rockefeller Foundation Resilience Center, which is supported by Adrienne Arsht and the Rockefeller Foundation, you would gather that, we have set a goal of reaching 1 billion people with resilient solutions by 2030 to the challenges of climate change, migration, and human security. Human security meaning public health and food and water security. And so when we define resilience, in shorthand, it is helping people survive and thrive against these threats. And the official definition to help people, institutions, governments, communities better prepare for, withstand, and recover from shocks and stresses. So a shock like a hurricane, a stress like sea level rise, or daily heat that gets hotter, and then the shock of a heat wave, pandemics and pandemic economic fallout. And so how do we make people more resilient, and how do we count you in our billion is that you have new knowledge, new skills, or a layer of protection over you that you may or may not be aware of that helps you survive and thrive. And that's where groups and efforts like the CRIF come in these parametric policies that cover countries and regions for these kinds of risks. One thing I want to start by saying, we are very excited today as part of the first day of hurricane season to announce our partnership with the CRIF. And we will be focused on many of the issues we've just talked about, the Prime Minister in talking about the financial discordance with the systems, and then the debt that has piled up. And when we as a center, a global center, look across the world, less than 4% of cities in the developing world have credit worthiness, are credit worthy. And so after COVID-19, we believe that number has dropped even further. And so we've partnered with the CRIF, with Isaac and his team and the 22 CRIF member countries to address some of those challenges, including access to capital and helping to innovate in some of the products and thinking about going more deeply into risk reduction so that you have lower risk to cover. And how do you make people and communities and towns more resilient such that you have less risk to cover? And this is, it's complex and layered, but our intent is to help reduce risks, make people more resilient, and try to help bring more access to capital and address some of those debt issues. We also love the CRIF. It's the shining example of the risk pool across the world, and there are other risk pools, and we would like to bring the very best of the CRIF to other parts of the world, including working on extreme heat risk and finance facilities and other risk transfer tools.
Kathy, you talked about the inequities that have revealed themselves, both in terms of who is getting affected the most by the pandemic and who suffers most acutely from all of the impacts of climate change. Are there some lessons that you've learned, some tools that target some of the money to particularly vulnerable people? Are there 2 or 3 things that work that can be taken to scale?
Yes. I'd like to just go right to the inequality piece and just note that, as Prime Minister Chassenet said, these storms, you had to borrow $900 million, and storms are the primary driver for loss of development gains and growth. 1% of the greenhouse gas emissions that are contributing to the temperatures we have now and the fuel that is making these storms so strong comes from these small island developing nations, 1%. So just to start with inequality right there, 99% of the impacts are coming to them with 1% of contribution. I think that's a good place to think about what we can do. We have to stop emitting greenhouse gases. So I'll just put that over to the side. Instruments that work. We have seen deep efforts being developed by the Insurance Development Forum, by the German government, by other entities to bring insurance risk transfer to at an individual, at a micro level, combined with micro financing, particularly for women and other vulnerable populations. We have seen all sorts of combinations of insurance with other risk reduction practices, and they're being tested in various places, but we're not quite to the scale we want to see. And I think the combination of bringing risk reduction with risk transfer and access to capital is a recipe for reducing the risk and increasing financial resilience. It's complicated, but yeah.
Both the Prime Minister and Mr. Anthony, both of you referred to tourism being the mainstay of the Caribbean economies in many countries, and tourism being hit very sharply, not just this year by the pandemic, but by other external shocks like the economic crisis. Does this make you, either of you can answer, both of you can answer this, I wonder if you think about whether and how countries of the Caribbean can pivot from an economy driven by tourism to something more diverse, especially if there are, the long-term impacts of climate change affect some of those very assets. If they're eroding beaches, if corals are bleached, how do you think about the tourism sector in the future?
Oh, you're on mute.
Who's trying to answer? The Prime Minister?
The Prime Minister.
Yes.
Yeah.
Yes. Great.
So the fact is that comparative advantage like tourism that can generate the level of foreign exchange earnings and jobs and economic output. Take a small island. My cost of electricity is 40 cents a kilowatt hour. The cost is $500. When you take
We're having a little trouble hearing you. What I gathered so far was tourism has a way of delivering foreign exchange like very few other sectors. Prime Minister, can you start again? Mr. Anthony, do you want to jump in here and talk about how you look at the region as a whole? I'm sorry, Prime Minister, we are having trouble hearing you. Mr. Anthony,
Yeah.
do you want to jump in for a second?
Back, but he's on mute.
Yeah.
Is that better?
Yes.
Okay.
That's better. Yes. Thank you so much. Yes.
No
Sorry.
problem. So what I was saying is that there is no industry that the Caribbean has in which we have a global comparative advantage similar to tourism. And there is no industry that can replace it, that can generate the levels of foreign exchange, job creations, and linkages to the other sectors that tourism can. And that when you start looking at the cost structure of cost of electricity, the cost of transportation, makes manufacturing and some of the other sectors more prohibitive. The one other area that we've had, which is the offshore financial services, the EU has been an all-out attack to eliminate that industry from the Caribbean, even though we represent less than 1% of that entire industry.
Fair enough. I hear you talk about all the pros of tourism.
Yes.
But I wonder if it is sustainable given the long-term slow burn risks of climate change.
Yep. So I would absolutely say to you that every single industry that we're going to have here are going to be susceptible to climate change because it's a physical destruction. And the fact is that tourism has proven to be substantially more resilient. Our hotels are the ones that are standing after the hurricanes. And I think that's really an important part that I want to bring to the table. The solutions to building resilience are not complicated. There are utility wires underground. There are bigger drains. They are helping with our rivers. The problem that we're having is finding the internal resources to be able to do it. So, for instance, Kathy made a very important point that there are two solutions here. One's called mitigation, and the other one is called emissions. Emissions is not the Caribbean's problem, but all the financing that's being brought to the table is for us to convert to green energy. But no money is being made available to us because of our per capita GDP to build the physical resilience that we need to sustain our tourism sector, to sustain our economies, and to sustain a way of life in our countries. So even right now, as a solution that's being proposed, is a carbon tax. Very important, very interesting concept. So the developed countries now are saying that they believe the cost of carbon emissions is $75 a ton.
So a carbon tax on airline tickets to
on airline tickets on
Caribbean resorts. Yeah.
Sure.
Are you concerned about that?
No, because it's also going to be put on tomatoes. So why is it that a tomato is being imported from Miami rather than depending on a farmer here? Simply because the economies of scale allow them to produce a tomato in Miami cheaper. But if that tomato does not include a carbon tax, then it's never going to be fair. And so there's going to be a balancing here, and I think it has. But here's the bigger problem, is in the United States of America or China, where the emissions are taking place, the emissions don't stay in their hemisphere, it goes to the global hemisphere. And therefore, how much of that carbon tax now should be given or shared with the other parts of the world that are feeling the consequence of the emissions in the first place? And why are the SIDS being so severely impacted? Because we're close to the equator. We are at the battlefront of this issue.
That's an interesting suggestion, Prime Minister. Are you proposing that the receipts of some of the carbon tax be shared with particularly climate vulnerable countries?
Absolutely.
Okay.
It's the only way. It's the only way. It's the only way to do it.
We're starting to get some really interesting questions, and I would invite all members of our audience to really throw some questions at our panel. One question that I want to direct to Mr. Anthony, which is related: insurance is an expensive way to manage risk for countries and for households. Are there ways to structure finance that's more equitable?
Yeah. So yeah, thanks. That's a question that comes up all the time.
That comes up a lot, yes.
And the reality is that the insurance that we provide, again, persons may consider it to be expensive, but the reality is that it is actually about 50% less than what countries would otherwise have to pay if they actually had to go to the commercial markets. Do recall that CRIF is actually set up as a not-for-profit organization for the benefit of its members. It's like a mutual. So all the residual benefit goes right back into the facility for the benefit of members. And the other point one has to recognize is that we are a risk pooling facility. So we pool risk right across the region into this single financial vehicle, again, which enables us to keep costs down. So the reality is that we do have to transfer a significant amount of our risk, as we have just done. Now that we've just started this new financial year, we had to buy reinsurance. Reinsurance is one of our big cost elements. And to a large extent, we are subject to the vagaries of the market, but while we've been taking attempts to reduce that cost, the reality is that it will always be one of those big cost elements. The other thing is that in terms of other instruments, I do know, for example, that there are contingent lines of credit, which is really a form of borrowing. But again, it's a product that has been promoted by both the World Bank and the Inter-American Development Bank and so on, that a number of countries have actually been able to purchase. The good thing about this particular product is that it's a very nice complement to what we do with insurance. If that a policy triggers and a country is able to get the payment, it becomes a loan to the country. But the repayment terms are considered to be concessionary. So these are things that I think we are looking at. Of course, as Prime Minister Shastney suggested, I think one of the things that the countries would really be happy for is a lot more grant resources to help them in building, in the rebuilding phase.
Yeah, I wonder if there are, and this is a question for Kathy and for Mr. Anthony, if there's any thought being given to what sort of risk insurance 2.0 looks like. You know, how does this model change and pivot? And I want to come back again to a question that I asked earlier. Are there specific things that countries can do to reduce the risk so that these models of transferring risk can continue, can be sustainable?
So yes, there are things that countries can do and communities can do. Absolutely, yes. I'll mention the Insurance Development Forum, and for those that don't know, the IDF, it is a collaboration between the development community and the insurance industry to bring insurance and risk transfer and risk modeling as a solution to sustain and grow development gains in developing countries. And so it's been in existence for several years and is under the leadership of Ekoswe Iyahin, this fantastic crackerjack woman who worked with the CRIF and I think with the African Risk Capacity. And the IDF is looking at how risk modeling, yes, risk transfer, but in the middle, you want that risk reduction. And so there are countless number of interventions that have evidence behind them that reduce risks of heat, of storm surge, of wind shear, of all these hazards, and to combine the access to capital with and this can be at an individual level, as I mentioned, a combination of a micro insurance. And these are difficult. I don't want to make these sound that they're all easy and done, but a combination of finance with risk transfer. And there are some great examples. There's a product called the Kenyan Livestock Insurance Program that pays before the cattle die using remote sensing to test that the vegetation is beginning to dry out, which would portend the death of the cattle. And so this product pays to the cell phone of the farmer such that they can get water and food and before the cattle die, which is usually the trigger for that kind of insurance. And so there are innovations, but I think changing our thinking from insurance as a way for big insurance companies to make a whole lot of money, and think of it as an approach and combine it and help make philanthropy and foundations comfortable with subsidizing premium to move societies ahead, to protect communities, would go a long way in bringing capital and reducing risks. Yeah.
A question for the Prime Minister, which is a really interesting one. Are there additional services that you would like to see CRIF provide to its member countries? Insurance products for other kinds of risks or other kinds of sectors?
Right now, not really, because the greatest threat that we have really is from the environment. And certainly we've seen with the pandemic, but the issue with the pandemic is that it's been global, and given our current, and I hate coming back to it, but given our current financial situation, has exacerbated already a very bad situation. I want to say to you that you asked a very important question in the beginning about what can we do to mitigate against risk. And the reality is we have to, because the cost of insurance, both through CRIF as well as in private. So for instance, a hotelier friend of mine in Dominica, his insurance at his hotel went up 200%. You cannot have insurance being 22% of your cost of operations. It starts becoming prohibitive. Persons wanting to get their homes insured in order to get a mortgage now becomes a problem. So the idea is that we must now focus on prevention. We must accept the fact that the world is going to be globally getting warmer, that these climate events are going to be occurring on a greater frequency. And to help is to now reduce and strengthen our existing infrastructure to reduce the economic fallout each time that we have it.
Can you
But
give
we're-
me 2 or 3 examples of those things? You mentioned some of that earlier. It's
Sure.
possible to reduce risk by desilting rivers, and you mentioned some other things.
So deeper drains around your roads, slope stabilization. So there's the ability to understand where the vulnerabilities are on the hillsides, both where next to communities and next to major infrastructural areas. And so you have to go and do the slope stabilization. It's taking bridges and raising them higher so they don't become dams during the point of major downpours. And so the engineering capacity or capability is there. What is limiting it is the inability of these countries to put the necessary monies up front to deal with it. And that is where we're being stymied. And this is where there has to be a change in the global architecture, particularly as it pertains to SIDS. And the evidence is continuously there. Either that the World Bank and the IMF, or particularly the World Bank, has to create a special fund. So let me give you an example. There was a green climate fund that was created. None of the SIDS got any money in the first 5 years, because to get access to the money, you first had to be an approved agent. Once you became an approved agent, then you had to be approved projects. The amount of bureaucracy that you have to go through to access the money. And as I said to them, I thought we got automatic entry into it because the evidence is there that we're the ones being impacted the most. So we need a dedicated fund. The other thing is, and Kathy said it, emissions is not our problem. So for instance, the idea that we have to be measured our success by how much emissions that we have, that's not where the problem is. The problem is in our preparedness to deal with these catastrophes. And this is the difficulty that we're having right now. So each time we have a hurricane, and we know the next hurricane season is starting today, but guess what? The following hurricane season is 1 year away. So time's not waiting for us. And in the last 4 years, we've made very little inroads in improving our resilience to climate change.
Here's a question that came in from our audience. Wouldn't subsidization of premiums by donors send the wrong signal and nudge countries and communities to take unreasonable risks? Wouldn't it be more resilient to invest this kind of donor money in risk reduction and or mitigation? That's a question for Kathy, I think.
I think you need both. I saw that a question from our fantastic senior fellow, Pablo Suarez. I think you need both in that if you track GDP growth, which I absolutely recognize is not the sole measurement of a country's success, but it is a measurement. So if you track GDP growth against premium collected in a country, they are one-to-one. So the more insurance coverage, whether that's at an individual level or at a sovereign level, a country has, the more sustained their growth is. So it is a financial tool that works. That's a macro picture. But on the innovation side, as I was saying, I think we need to do both. And that's part of the partnership with the CRIF of investment in risk mitigation and in risk reduction that comes with risk transfer of the risk you can't hold yourself. And I don't think we can mitigate all the risks away. And I think this day of all days shows us that, and that we still need these financial strategies, and we need both financial resilience and physical resilience for people and communities.
Here's another thoughtful question. Increasing resilience should reduce the cost of insurance. So if I do something, will my premium go down? Are there specific examples of that you can cite?
Isaac, do you want to say something about that from your perspective? I have a thought, but
sure. I mean, that's again a question that comes in theory. It should happen. I mean, if you're taking steps to build resilience and so on over time, one would expect that the underlying risk will reduce. I mean, one of the big issues that we've been dealing with in the region is just trying to get countries to implement building codes. You know, I mean, we've been talking a lot about it. Unfortunately, the region really has not made a lot of progress. And I think that's really an opportunity for us to deal with this particular issue. So if we can institute proper billing codes and ensure there is enforcement with those codes, I think over time, it would certainly help to improve the level of resilience, which invariably will have some positive impact on costs. I mean, at the end of the day, the models that we have, that we use, for example, to assess risk and so on, those models are being updated periodically. And as we update the model, of course, the variables that are in there will be updated over time, and we'll take into account any improvement that the countries will make. So yes, indeed, it should have a
So it should reduce the premium. But if I actually enact the right building codes and enforce the right building codes, will my premium under CRIF go down?
Well, again, you will see the benefits over time.
But my premium won't go down.
It's not an immediate thing. It will happen. You need to see the benefit. In other words, if there's a proper billing code, and when we do the assessment of the losses, it will take into account a number of factors. For example, it will take into account the ability of that asset to be able to stand up, let's say, to a Category 3 hurricane, or as opposed to a Category 5 hurricane. And all of that is going to have some positive impact on the model itself, and therefore the cost, which will eventually lead to a reduction in the cost of premium. But as I said, it's not an instantaneous thing. It happens over time.
So Kathy, what is my incentive to build my house better if my insurance premium is not going to go down?
Well, and we're talking about sovereign level insurance, which is different from P&C insurance that you would buy for your home, which is an indemnity insurance, which is different. But
but just for this parametric insurance, yeah.
For the parametric, I think that this could get so arcane that we might lose everybody. But
this general point, I think, is a good point, right? Increasing resilience should reduce the cost of resilience. And Isaac Anthony said, yes, in principle it should, but right now under the rules, it won't immediately reduce your premium.
But it does show in the chain of risk that there are programs that do this, and there's a program called Flash Florida Safe Home, and it allowed you to have a free inspection for the ways that you could hurricane-proof or hurricane-harden your home. And when an inspector came and said, yes, you have done those things, and there was a grant to help you do those things, you had an immediate reduction in your premium of, I don't remember what it was, 15, 20% from your primary insurance company, a State Farm, Allstate, something like that. So those programs do exist. And in the FEMA flood insurance, NFIP program, there's something called the Community Resilience Program. And it essentially gives communities a chance to reduce their flood risk, and then everybody in the community gets a reduction in their premium for having had the community reduce the risk. There are lots of examples of this. So Robert Muir-Wood is absolutely right. They need to go together. There are lots of market unpredictabilities and factors that are hard to make it, as Isaac said, a one-to-one where you do this and you do that in a parametric at a sovereign level. But I think the idea is, let's reduce the risk, then let's reduce the cost of covering that risk, and let's build financial resilience. That's the idea.
We are fast running out of time, and I want to give each of our speakers just really 1 minute to think about, to tell us what is the one thing you would change to make the region as a whole, the Caribbean as a whole, more resilient to the impacts that we know are coming, the climate impacts that we know are coming. One thing, and 1 minute, please. Prime Minister, do you want to go first?
Thank you very much. I just want to continue with the conversation you were just having, because that is the issue. The only way to reduce the risk is through mitigation and also emissions. So we depend on the global world to reduce climate emissions, which will ultimately reduce the size of these hurricanes, and that is where you're going to reduce the risk. But in the meanwhile, by investing in resilience reduces the cost that we have to incur after the hurricane. That's where the investment in resilience helps us, not in reducing the insurance. The only way to reduce the insurance is globally, we must tackle climate change.
Mr. Anthony?
Well,
One thing you would change.
I think the key thing, though, for us is to be able to work more collaboratively. I feel that as a region, and certainly as the world, as we tackle this, I think that there's need for more coordinated action in terms of helping to address this global issue of resilience, particularly on the impact of small island countries. So one of the things I would definitely like to change again is just the way that countries are being dealt with, particularly the small islands, in terms of the impact that in terms of how the discussion is taking place, and perhaps not enough attention is being given to some of the key issues. So essentially, that's how I would look at it.
Kathy, your one thing.
One thing is to recognize that incongruity in the global economic architecture that the Prime Minister cited right at the top, and address the debt and start fresh, wipe it out and start fresh by investing in resilience, resilient infrastructure, resilient communities, and the rest would follow.
It sounds like more debt is being piled on and no debt is being piled off. That will create problems down the road for ordinary people and the most vulnerable people in the societies. With that, I turn it over to you, Kathy.
Thank you very much. Let me say thank you to our speakers, and Prime Minister, thank you for coming to us from your car. I really appreciate your thoughts and your investment in this hour with us, and we look forward to our partnership with you. Isaac, same. The CRIF is a shining example of so much good done and also so much potential for innovation and taking your approach around the world. Thank you for joining us and facilitating this. There's so much more to talk about, I know, and we look forward to that conversation. And to you, Adrian, for your vision for this Resilience Center and giving us the ability to do this. Really appreciate your being with us today and your vision and inspiration. And I'll say thank you to the Rockefeller Foundation for their support for our center. And they're one of the early investors in the CRIF, and they have a passion for these issues as well. And to all of you that joined us, and for those that love risk transfer as much as we do here at the Resilience Center and at the CRIF, thank you so much for spending some time with us today. This will be recorded, and so it can be shared with others. And we look forward to the partnership to make 1 billion people more resilient over the next 9.8 years. Time is ticking. Thank you very much and enjoy your day.
Thank you.
Thank you.
Thank you.
Thank you.